Welcome back to the Poll Report. It is 9 o'clock on the 15th. Happy Monday. Happy tax day. Let's get started for the Poll Report. We know there's risk in trading and always use trade capital only. Do not trade with money you can't afford to lose, whether you're trading stocks, options, futures, forex, cryptos, whatever asset class you are trading, you know the risks. Let's take a look at the market. We're about 30 minutes before the open. Pre-market SPY is up around $4, which means we have some futures pointed to the upside. We had a bit of a scare over the weekend with Iran, Israel, and here we go. So futures market straight up 0.72% on the Dow Jones futures, S&P futures 0.69%, NASDAQ 0.74%. Gold, we'll take a look at that. Silver as well, creeping up towards $30. Oil, not a crazy move yet, but we're still sitting around $85. I still like bullish on gold as the safe haven and hedge continues, and silver kind of playing the catch-up trade. Oil, questions remain whether oil is going to be, $100 or more per barrel. Also want to take a look. I had some discussions and thoughts over the weekend on some natural gas. I looked at some ETFs to play it. It's not ideal. I think if I'm going to play natural gas, it's going to be the futures market, and I'll see what that pricing looks like. But anyway, let's have a look. So futures up this morning, looking like a big pre-market gap to the upside. We can come all the way up here. Now, a Friday to Monday gap in the markets are pretty substantial, but the gap from last week, this was Thursday to Friday, also a gap that gets us up to like 517 on the SPY. So if the market is interested in opening here, trying to fill or, basically fill this gap from last week, Thursday, Friday, and then fade to fill today's gap, I still think the pressure remains to the downside. One very important thing to watch is even if we were to gap higher, we're pushing up higher 515. So we're up now, $4.20. As long as we don't take out this high or these previous highs, I would say that the bulls are still, or I'm sorry, the bears rather, still in control, at least on a correction. So let's go to a higher time frame. Let's say good morning to everybody. Gary, good morning. Chris, good morning. Don, good morning. Good morning and a happy Monday, everybody. Type in that in the chat. So here we have the daily time frame. Daily close from last week was below the floor that I had drawn on the SPY. The DIA, same thing. We had several days on the Dow below the floor that I had drawn. The Qs were a little bit more resilient, but major support here on 432, just below that 432.70 level. These expirations have already been played out for profit, so we're good there. And we do have some earnings kicking off this week as well. Q1 earnings kicking off. There's high impact news. I'll talk through that in just a moment. Here we go. So Goldman Sachs will be before the market opens, as was Schwab. Tuesday before market open, Bank of America, Morgan Stanley, Johnson & Johnson, United Healthcare, Interactive Brokers, United Airlines. Take a look at that as aftermarket Tuesday. Wednesday, Abbott Labs, ASML Holdings, Alcoa. That'll be interesting. One with some probably high volatility on Wednesday. Thursday, big one to watch, Taiwan Semiconductors, TSM. That's before market open on Thursday. We might look at an earnings play on that. A couple ways to play that. We'll take a look at it this week in Equities on Demand. Blackstone, Ally Financial, Alaska Air Group. That was the plane that lost a door in flight. Boeing's been getting beat up pretty badly as well. DR Horton, Home Builder, Netflix, Procter & Gamble, American Express, Schlumberger. So I think it's Schlumberger, something like that. It's pronounced funny. But anyway, kicking off, we have 121 companies, I think I posted in the chat. Let me see here. Where did I post that yesterday? So yeah, 121 companies reporting earnings. We're kicking off Q1 right now in this week. So keep an eye on that. This week's high impact news, we have core retail sales this morning, 8:30 a.m. So we can take a look at the calendar and see how that printed. We have CPI for Canada. We have CPI for New Zealand, CPI for the Great British Pound or the UK, employment news out of the Aussie, and unemployment claims on Thursday, retail sales for the pound on Friday. That's just all high impact news this week. So we still have PCE to get through by the end of the month. We have tax day, tax deadlines today. We have major expirations for the monthlies. I was taking a look at some of these. So looking at the major expirations and open interest this week, we see here, this is all subject to change as things unfold through the week, but we're looking at put open interest around 3.2 million and call open interest around 1. Currently, from the close last week, around 510, 511. You can see that it's kind of sprinkled on both sides, but the bigger histogram levels are to the downside. So as we talk through these indexes, pressure remains to the downside. I've got a chart alarm sitting here at fresh lows. For the Dow, same thing. If we're going to open up, this looks like about $3 higher. Let me put a chart alarm here at some fresh lows. So 378.63, this would be fresh lows. And I have a couple of trades running. Even though last week I was gone, still ended up grabbing some profit. I was 5 for 5 last week on the SPX. I have another trade running for this week. Here is the SPX right here. Little strategy expiration is today, so that's a 0 DTE. I put this on last week on Friday. As long as the SPX stays, this would be a 77-point day if my position is threatened. If it is threatened, it's going to look something like this. Let's see if I can float this down. So this is my 5,200 right here on the SPX. So if price, we're sitting here at the close of 51.23. If we push up towards around 51.40, 51.50, that still is, guaranteed credit for me for the rest of the day. If we come up and threaten my position at 52, then that's actually a good thing with 0 DTE because I stand to gain roughly a 10x position there. So if at any time it's starting to flirt with these levels to the upside, then I can, go from a 50 to 60 cent credit to possibly, another extra $1 to $2 of credit before the end of the day. So anyway, that's what it looks like. I don't think we're going to threaten that position at 5,200. That's way up there. That would be the SPX. Yep. So that'd be the high. So I'll take a look and watch that today. Just reviewing some of the positions overall with my expirations. Profits coming this week on, this is oil futures. Russell, have some bull put spreads. SPY, I have an iron condor on the SPY. So my 480, I'm trying to think here. This was 5 and 5. Oh yeah, this is a bull put spread. This is way out of the money. That should be fine by this week. This is also a bull put spread. This is also a bear call spread. So a little iron condor action. That's 510 sitting right in the middle. So I don't think 480 is going to be reached, and I don't think 535 is going to be reached. So looking for some full profit on the SPY this week. Chewy up some decent profit. I've got some covered calls rolled. Own some shares of this one. We had a nice little bounce back on the stock. URA, this is sitting right where I want it to be for some profit. So anyway, just looking down the list of expirations that are coming through, got some good profits rolling in. IWM, this one goes out to January of next year. I'm just going to look to continue to sell against this low cost basis on a longer term play in IWM. So that's the management side of things this morning. And for the week, there's the DIA, there's the SPY, and the Qs. It will be interesting to see if there's resiliency here in the tech world, especially large cap tech. Apple had a big bounce last week off the lows at 167, and Apple ripped to the upside. I should have some expirations coming on Apple as well. Let me go into symbols. Apple expirations out to, I've got the 170 by 165 out to this week. Those should be in profit. Hopefully, if we stay up above 175, 176, I need to stay above 170 for full profit. And then I've got the 160 by the 155 out to May. And Apple continues to look pretty good to me as far as just staying out of the way. We're back down to equal lows, possibly a range and some support coming on Apple. Tesla showing some resiliency as well. Holding these lows thus far off the 160 handle. We're back up to 170. I have some exposure on Tesla as well right in here. Got the 160 by 155. So looking fine out to this Friday. That should be full profit. Okie dokie. Morning, Ron. Morning, Ann. How are you? Nice to see everybody. And everyone should see that we're live. 9 a.m. live session is underway for the followers in the Discord channel. Let's have a look at oil, gold, silver. So oil, trading here 85. Still room to stretch up into the 90s. I still think the big resistance level is the 92 to 95 zone. If things get a little scary and dicey with the geopolitical tensions out there and the threat, you see it pop right up there. Geopolitical risks in turbulent times. You know, again, I mean, if I'm wrong and it comes up and just blows through, 96 to $100, okay, then we're talking higher oil prices and we're talking kind of supply and demand crisis mode at that point. However, I still think that it may be a good play to stay long in oil for right now, and I'm looking to see if that level is responding to resistance. So once we get into the 90s, I'll be trapping profits on oil and looking to turn and see if that resistance will hold. If we break through this level, then sure, next stop would be our COVID highs, and that's going to make things really interesting as far as risk off. But I don't think we're going all the way up to 100 plus. I think we're probably staring at 90-ish. If we spike up to 100, watch for a false breakout. I think the supply and demand levels will still respond, and we'll still have a bit of a correction coming on oil once we hit 90.95. Gold, 23.55. We had a big spike high last week around 24.33. Nearly hit that full profit target from the measured move, going back to the highs in. Let me get this out of the way. Going back to the highs in 2020 to the lows in 2021. Just measure the move. That's a halfway point. Achieved that. Took profit on gold, and trailing stop losses. Nearly hitting that full extended move around 24.74. Gold is still looking solid to buy the dip and have this run continue. It's just hard to participate, with all-time highs and how high does it go, how parabolic does it get, when instead I think that silver is a better run. So silver to me has more upside potential, easier to see, easier to measure. So I'm focused a lot more on silver. If I go back into my positions here, you can see I'm up around 16.5. For some silver positions, that's SLV. And then also I have some silver futures right here, up some profit as well. So to me, silver is easier to measure. This is XAG. So we crept up here towards the highs, which would have been our 2020 highs, and then a rejection here in early 2021. I still like buying the dip. So if we have a pullback towards 26, 26.50, or if it's a bull flag pattern, I still like bullish on silver. And overall, I'm going towards $45 to $47 for some fresh highs. If we go to SLV, way to paper trade this, we have some overbought conditions. I've moved up all of my sell call levels to $30. So I think those are out to May or June. Let me double check those. If I get it called away, that's okay. I'm out to July on the $30 calls. So if we run through these, I could possibly roll out further in time. I could also roll out for another credit. I did that last week on SLV, lowered the cost basis by like another 25 cents and rolled it up. I've rolled this up from 26 all the way to 30. So I'm giving myself $4 of extra upside for profit. And I'll continue to do that probably through this like 32, almost $33 handle before I'm looking to get it possibly called away. And I can also reestablish positions if we see a pullback and look to buy the dip. So I still like silver. In fact, I like silver better than gold at this time, just because gold, you're wondering if all-time highs keep going. It looks more parabolic. Silver just had a breakout within the last couple of weeks. That was a breakout there around March, end of March, early April, and it's just easier to see and measure. So I think we've got some good upside, and just let it roam, let it do its thing. Okay, all right. Morning, Wayne. Morning, Trish. How are you? So that's silver and gold. Bitcoin had some volatility over the weekend. We're still sitting here. I believe we have a halving event coming soon. Bitcoin mining CEOs remain upbeat 5 days away from the halving. There you go. So is that happening this week? Halving is when? See if it shows it. So Bitcoin versus Bitcoin miners. Miners have been underperforming, that is for sure. Here we go. Halving events now just 5 days away. Countdown page, April 20th around 5:40 a.m. Programmed to occur automatically every 210,000 blocks, roughly every 4 years. Miners receive 50% fewer Bitcoins as a subsidy reward for every block transactions they make. Or they mine. Next halving event sees subsidy. Yep. Okay. So we'll see how that plays out. And mining, only exposure I have in mining is MARA, sitting here around $16. I own the shares around 20 bucks, and I'm trying to get it called away around 45. When we started to see this rally up here towards 30 and 34, rolled it out in time, rolled it for a credit, almost $1 out. Plus, I rolled it way up to 45 bucks as prices were going up, 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 and sitting on shares around 20 bucks. So I'm set on a little bit break even wise, but give myself some decent upside. And once if and when I can get this called away around $45 or somewhere for a decent chunk of profit, I'm probably just going to keep the Bitcoin exposure, not to miners. I don't think I'm that interested in playing the Bitcoin mining game. I'll just stick to the spot and correlated ETFs or just Bitcoin in my cold storage wallet. So that is some crypto there. Let's talk currencies. Dollar index trading at 105.98. So we are up through, this happened last week. We are up through the support that I talked about. This is why I was bullish on the dollar going into this year. Coming off the holiday support and that pivot around 101. Here we are. It got pretty confusing in this yellow box, but we have a nice clean breakout for last week. The geopolitical, risk-off trading helped. If you look at the currency strength chart from Friday, this was Friday with the dollar and the yen on top. The Swiss was up for a little bit and then faded back down. But today, we'll see how things shake out. The JPY is super weak today, as it looks like the futures market's responding, and we're possibly seeing some risk appetite out there. Again, the carry trade, I keep talking about this. I don't see it unraveling. So I like a weaker Japanese yen. I'm looking for a weaker Swiss franc to continue to persist as the market is looking for some yield. So in the currency world, we're probably going to stay pretty consistent to that theme through the end of this year. And if we have an unraveling, I would expect that to be late 2024 or into Q1, Q2 of 2025. So I think the JPY continues to stay weaker, and that's the direction I'm playing right now. Right, but dollar index heading higher, and with this broadening pattern, we've got a chart alarm set at these highs. These were the highs that we saw back in 2023. We could poke those levels, drift a little bit higher. Once we get towards 107.50 to 108, I would be looking to fade the dollar from there and probably have a dollar weakness position planned for the remainder of. I mean, that would be a pretty good chunk if we were correct, seeing some resistance here and then the dollar getting weaker towards 101, there could be some serious trading opportunities in the Forex world with that type of cooperative technicals on the dollar index. Other currencies, like I said, I'm trading against the yen. I think the yen is going to stay weaker. So if we take a look at Aussie yen, we're still making higher highs and higher lows. Stay with that direction for right now. I don't see that unraveling anytime soon. CAD yen is poking up the fresh highs. Swiss yen, I probably got stopped out. Yep, I'm going to get stopped out at break even on this one. Son of a gun. We were up as many as about 220 pips on this trade, and it didn't really go much lower. The Japanese yen, after a day like today, is probably going to get triggered. So it's 169. Those should be break even. Euro yen creeping up towards fresh highs. Pound yen creeping up towards fresh highs. New Zealand yen. New Zealand's been lagging and underperforming. We have some news this week on the Kiwi. We'll see if this one has some room to run. This is a pretty easy trade. If you were long New Zealand yen, stop loss, just outside the trend line, you go up to some fresh highs. There's a nice little reward to risk there, probably 1.5 to 1, maybe just shy of 2 to 1 on that Kiwi yen. And the dollar yen, we looked at this one to break above 152, and it did. If you're long on that breakout, we've talked about this for weeks. Waiting for a price to give us something. We finally got a daily candle. We broke above 152, and here we are, 220 pips higher. So I don't know where this thing stops. I'm not calling the top on dollar yen. I would say stay long, stay long, stay long, because the carry trade is still in full effect. So dollar looks more attractive than yen, and that's it. I mean, I don't want to call the top, and if this is going to be an easy sell trade, we're going to be talking about the dollar yen way down here. So right now is not the time to call the top. Don't worry about it. Just stay with your alignment. Stay, 4 hour, 1 hour, whatever your alignments are. But I would say I like buying the dips. Buy the dip. Buy the dip. We're making higher lows. We're not breaking any major structure. So don't call the top. I'm curious what the retail sentiment positioning is. If you're looking at like commitment of traders, how many traders are now holding dollar yen short. It could be getting more extreme, or they could be getting busted up here because that 152 high was broken. So I still think it looks solid as far as staying long. Swiss pairs, I like buying dips on Aussie Swiss. I like buying dips on CAD Swiss. I like buying dips on Euro Swiss. In fact, I might, for my portfolio builder account, I might just go in and put another small market order in. We've had some dips. I don't mind taking a little stab at that and getting some additional exposure since we've had some decent pullbacks. It could be deeper pullbacks coming, but I'm just going to stay long. And we've had a little bit of a pullback. I mean, that's from the highs at 55 down to 54, about 100 pip pullback on the New Zealand Swiss. The dollar Swiss has not pulled back because the dollar's been stronger. This one should be pulling back, but it may not occur until we take out this high around 92. So if the dollar Swiss continues up here, then looking for a bit of a pullback, I still like buying dips. But as far as like pound Swiss, Euro Swiss, I like those trades a lot to maybe throw in another small market order. So probably doing that today to get caught back up as I was out of town last week. Okie dokie. Anything else? I know we just whipped through a bunch of stuff. We did the dollar, oil, gold, silver, did the stock market, the indexes. I got positions running for today with expirations. I got a lot of expirations coming on Friday. Let me double check here. So I should have a lot of 4-day expirations. If I go to days to expiration, all these with 4s next to that, that's going to be a Friday expiration going out probably, I would almost say a third of my portfolio has some expirations on Friday, which is fine because I started those out essentially Q1 positions and went out all of Q1, did like a 45-day cycle or so on some of these accounts. So this will help me kind of concentrate the portfolio a little bit more. Hopefully see some good profit today on the SPX and trade a couple more times. Got a DIA trade that goes out to Friday. I think this one's looking good if price comes to me all the way back down to 370, which allows for another like 2 to 3% of the downside. Then that allows me to make 8 to 10x return as well by Friday if I can kind of time it right. So anyway, should be some credit overall if we just stay somewhat resilient, and we'll find out. So if you have any questions, any requests, type it in the chat. We'll go for a few more minutes. Schedule today. I posted this in the Discord channel. I think I will be live with the A1 trading team today. If I don't have an email, I saw them last week in person. I did a session with them, I think on Wednesday. Now that I'm back, I'm thinking I might be joining up with them this morning. If I'm not, then we can do a 10 a.m. equities on demand. I'll switch it around to Discord, but as the schedule stands right now, this session for the Pulver report and then live with A1 trading at the top of the hour at 10 a.m. I have a webinar to do, and then I'll do an equities on demand session later in the day, 12:15 Eastern time, so I can finish up that webinar and we can get positioned for some stocks and options. Again, probably some notables if I want to do some earnings plays this week. Depends on the prices, but I would look at something, possibly United Airlines. This is before market on Tuesday. We can look at a Johnson & Johnson. We can look at United Healthcare. Both pretty expensive stocks. Certainly United Healthcare, one of the big ones for the healthcare sector. I don't know. I'd honestly look for, we'd probably play some broken wing butterflies as opposed to the reverse iron condors. If we want some volatility, Abbott Labs, ASML, Taiwan Semiconductors, Alcoa, those are probably the high volatility ones. Las Vegas Sands, if it comes down low enough, I'd be interested. What else? DR Horton, Home Builder, Netflix. You want some volatility, you definitely get some gaps up, gaps down. Netflix, we're possibly going to poke all-time highs if we have a good report for Netflix. But the overall sentiment, I mean, the grounds are shaky for the fact that we're breaking those lows. We did have about a 2.8% dip on the S&P from the all-time highs. That's one of the deeper pullbacks we've seen. So from the high to low, about 3%. And I've been saying this for several weeks now. If we have a 3 to 5% pullback, that's a healthy sign of a correction, and then we'll see if the bulls want to step back in. I would personally like to see just a little bit more pressure to the downside. If we get to the 236 or a 330 or 382, I mean that's all these levels here. So there's a 236, 30, and 382. So if I can get these levels filled, then I'm looking for a run back to the all-time highs, maybe higher. So I would like to see additional pressure to the downside, but it's going to feel terrible. We know that if the market's going to sell off, it's going to feel like you can't win. It's going to feel like there's fear like crazy. And it's hard to be courageous, but you have to know this is what the market does, right? The market is forward thinking. So if we have pressure mounting on geopolitical concerns, then sure, we could have oil spiking, we could have pressure in equities, we could have the dollar going higher, we could have gold going higher, silver going higher, Bitcoin could be sideways until there's more clarity after the halving on the 20th. But just things to monitor. If we come down lower, I'm certainly interested in buying dips. I don't know if we're going to make all-time highs. In fact, it might be such a good run from this low to this high that we pull back and then we have a range that gets us into summer trading, right? We could have a range getting into summer trading, get to the end of the year. Can the market, make a rally? Can we rally into the election? Can we rally outside of the election? And then see how this, shapes up into 2025. I don't know, but we're going to find out. We're going to trade it. Okay. All right. Go play. Yeah. Thanks, Keith. It'd be nice. It would be nice. Got to spend another probably month or so on this stupid arm. I did hit some balls when I was in Augusta, and it's okay. I can tell that my arm needs some work. I'm playing about 75% right now, and the arm is bowed and it's not fully flexed and it's not fully extended and it's weak. But I can say one thing definitively. This is again my opinion. Okay, but I would say that of the Augusta menu, egg salad was the clear winner this week. I tried pimento cheese, egg salad, the Master's Club, the barbecue pork, the breakfast sandwich, and I think there was a ham and Swiss chicken salad. Anyway, I tried it all. It's nice when you can walk a course and walk about 8 to 10 miles a day. You don't feel bad about eating a couple sandwiches, but yeah, egg salad, not even close. Pimento cheese is good, but egg salad's better. I'm not even an egg salad fan. Just it's a good sandwich at Augusta. All right. Anyway, LMND, Lemonade Inc. See a nice little range there. We have some insurance. Okay. Let me do a little snowflake analysis in this stock. See if we've got some profits. See if we have some money. See if we have any insider selling. Lemonade. This is my concern. Just talking objectively here. My concern would be this risk analysis right there. Currently unprofitable, not forecast to become profitable over the next 3 years. So that's enough for me to say I don't want to own the shares. If I wanted to do something, I mean, maybe a cash secured put situation where this would not be a bad play, where if it was out far enough and low enough with the sell put, maybe looking at saying, look, I would own this stock at $11 or $10, but that's about it. So let me see what that looks like, how far out we could go, what we could get for some potential trades. It looks like we had either an IPO or a SPAC back in 2020. I would assume a SPAC because that was all the rave in 2020. But this thing hasn't gone anywhere since 2022. This is Q1 2022. We're just sitting here kind of peppering these lows around $11 or $12. So could we see something around $10 to $11? Let's find out. LMND. So Lemonade Common Shares. Go to a trade, go out to December 2025. That's 600 days away. Oh, that's December. Wow. So if I went to January, I don't mind this. Like a $10 put, you can get $1 for that. So if you want to own the shares, you'd own it at $9.05. That's not a bad play. Doesn't tie up a ton of buying power. So that's a position that's essentially saying, look, I'll own it at all-time lows. I'll have a break even at $9 and change. But December, January of 2025 is a long ways away. However, if all you did was put on a put at $10 and your break even is 905 and price goes higher, you just collect the income. It's pretty straightforward. Obviously a lot of indecision, but I just don't like the fact that it's not profitable for the next couple of years. So choose wisely. I just think that longer term it looks a little rough at this time. At some point, either this is a merger acquisition type situation, but anyway, that's what I would consider playing it if it was me. If I like it enough to say I want to own it. Okay. All right. Morning, Don. All right. Opening bell. We're at 514.76 on the SPY. Let's share a little price action here. Float this out. So we gap higher on the SPY. This is our gap from Thursday to Friday. Are we going to quickly come back and fill the gap today? We're going to be finding out. Volatility on Monday is usually pretty lackluster. So I could see us opening higher, maybe drifting into this gap and then fading. But I don't expect a lot of volatility today. And like I said, my SPX position is safe all the way up to 520 on the SPY, 5200 on the SPX. So, and it, by the way, if it's threatened, that's actually good, because if it's threatened, this is my 8 to 10x return. No, it's by end of day, but by 3 p.m., 3:30 p.m. Eastern time, if that trade is happening right there, then I'm looking pretty good for full profit. Okay, so that is that. And we'll see. But I'm gonna look at maybe some. I don't know. I'm gonna pick my SPX battles pretty closely, or pretty carefully this week, because breaking those floors and having the market rip up in futures, having all the geopolitical tensions this week. We have Q1 earnings kicking off, so there's a lot of stuff in the mix that could throw price all over the place. So just gonna watch, just gonna be careful. But should have some SPY profits coming in this week. Should have some SPX profits coming in today. The DIA, as long as we stay above 370 by Friday, I'm in good shape there for a couple of bucks as well. And I'll watch. So what's the price? So CENX, that's aluminum actually making some fresh highs. We'll take a look at CENX and Alcoa. Let's go to this. What are you doing? Get off my screen. Okay, so the DIA from all-time highs had about a 5% correction on the Dow. So Dow looks pretty, I don't know, I'd say pretty attractive as far as having a dip, having a correction, if we can retest the highs. But again, we're not without, I mean, we pulled back to the 23%. 23% test the highs, 30% test the highs. I like that. I like that play. This is why I was looking to see if price comes down here. That's a 8 to 10x return on a broken wing butterfly. If it doesn't come down there, I just keep the credit. And if we can get a chance to kind of load up on a couple of trades, I would certainly be interested in staying bullish at some big corrective levels. So I think that's probably it for me. I can wrap it up there for the day. And we will be back later this week for some more Pulver Report live on YouTube. And if you have not had a chance to join, is everybody in my Discord group, by the way? I'm sure a lot of you are followers of my trading rooms in my Discord group. If you are, great. Look for those, kind of day-to-day posts, back in the normal swing of things this week, as I was gone last week. But I can post at least a link if you have not joined, or you're watching this recording, you want to get a link. If you're watching this after the live session, you can still check out the live chat, and this link should work. So let me go create invite, and I'll do an expiration that doesn't exist, and I'll set the link to join my Discord channel. So this is join my free Discord. There you go. And I will take a look at the SPY. Directionally, if I wanted to play, we're right in the middle, right? You can see the gap right here. You can see the gap that we just opened with from Friday's close. Price either stays indecisive today with a low volume Monday, or we possibly gap higher. We see a 55-0 favoring the call sentiment right now. And if the bulls stay a little bit in control for the day, I could see this market getting faded back down if we don't break the highs. So as long as we don't break the highs around 520, that's SPY 520. If we don't break 518, let me see what this gap is. That gap should be around 518. So the gap's around 518. The previous high is right there around 519 and change. If we do not cross above these highs at 519 and change, I think this market fades it back down and the pressure remains to the downside. Contract wise, I see that the 520 gamma level is quite a bit higher. If we go to real time right now, 520 is higher. That's an awfully big move for a Friday to Monday, though. I don't see the market getting all the way to 520 today. If it does, impressive. If it does, that also gets my my SPX into some nice profit today as the day unfolds and expirations hit at 4 p.m. So that's what I'll be monitoring. But it's, Mondays are typically pretty quiet days, and now that we're at 514, I mean, even having like a $3 to $4 move is still within the average trading range. If I use some information here, just some interesting stuff to monitor. If we go to the last 5 years and we go by weekday, a lot of times we have gaps up. Okay. Gaps up by weekday on Mondays. 50% of the time the gaps fill. I'm more interested in the size of the gap, because a gap up, okay, gap up by size. If we have, that was a pretty decent close. So let me measure this. So if we go close around 510.83, so a 510.83 gap to an open around 5, let's say 515.16. That's a 433 gap on an instrument of 5. I said 510.80 something, 510. All right, so that's about a 0.84% gap. 0.84% gap. So going back into this to this, 0.8% puts us into this area. Anytime we have a gap up, 60% of the time it is not filled. Okay. So again, last 5 years, if we have big gaps to the size of 0.4 to 0.1%, probability is it's not going to fill. So that means that for today, most likely we stay away from this gap. Pressure maybe just hangs out here, tries to threaten that gap from Thursday to Friday last week, but I don't see the market necessarily pushing all the way up to these highs. That would be a big move from a Friday close at 512 to a move up to 520. That's an $8 move within 2 trading days. That's quite a bit. So anyway, that's it. So I'm going to look and see, maybe a 509. Let me take a look at a couple things. SPX here, trade, and go into today's expirations. That's my long call butterfly spread. That's a broken wing butterfly, so I'm collecting some credit as long as price stays below 5,200. If it starts to threaten my position, that's good, because it gives me a chance to get that peak by the end of the day. On the put side, anything below 5110, that's a 10 delta at the moment. And that wouldn't be a terrible spot, but let me just double check right here. If I go SPX, look at some of my gamma levels on the SPX. So could I get something today at 5108 or 5110? Again, 60% of the time this gap won't fill. So if I have something around 5110, let me see what that looks like here. If I did a put butterfly. So if I sell, let's say the 5110, there's my skip strike, there's my butterfly. So right now I could grab 20 cents credit on that. If I skip it down another strike, I can get 40 cents credit on that. Probability of profit 95%. That's pretty high. 5110, 5115, 5110. I mean, that's down to some fresh lows. That'd be a lot of volatility for a Monday. I'm going to take that trade. 5110. So can I get, if I get filled for 40 cents, I'm going after that trade. So 5110. All right, let's see if I can get filled. If I get filled, I'm hoping for 40 cents. So 2 contracts here. I don't know if I'm going to get filled at 40 cents, but we're going to find out. Price would have to fall a little bit, and this would possibly gain in some value. Let me go back to this for a second. Float it out here. So we hit the gamma level around 51.75. Looking to see if we have just some gap plays today. But as long as we stay below 5,200, 5,210, I'm looking for 5110, which is all the way down here. So that would still be a $50 or 50 point move on the SPX today, which is pretty decent. This is going to get, as price goes higher, my broken wing that's down here is going to get less and less credit. So it's trading for 40 cents right now. Let me see if I can get filled. Mid is 30. Yeah, I'm asking for 40. I'm probably not going to get filled, but let's find out. See if I can get filled here. So 40 cents, good till canceled. See if that fills. $0.30 mid, similar order. So anyway, you don't need to see me do this, but I'm just going to take the pending order. See if I get filled for 40 cents. Similar 8051. $7.634. Okay, so that's pending. We do a similar here. Okay, I should be good there. All right, so let's float this back out. Pending orders, it's down here. If it gets filled at 40 cents, I'll just monitor that for the morning, but that's all. All right, I'll let you go. Let me see if I'm starting a session at 10 o'clock. So far, looks like I'm not. So equities on demand students, let's join up at 10 o'clock and I'll keep the session to an hour or so. I've got the 11 o'clock webinar, so I'm going to edit this in my Discord. So that'd be 10 a.m. equities on demand session and the 11 o'clock webinar. Okay. So that's updated. And then I'll have a top weekly pick posted in my Discord channel as well later this afternoon. All right, buddy. Happy Monday. Nice to be back and nice to see everybody. And we'll chat soon. All right. Thanks. Take care. Bye.